Welcome back. I'm Pratap here. Today is 30 December 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. And the cost of the training is over 8,000 US dollars, but we are providing complete free training. And all the training lessons can be accessible at our NeoStock YouTube channel. So at our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. Then you get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we will be providing at our Telegram channel. Now let's get into the analysis discussion. So in the previous end of the day report, we identified 8 high liquidity zones, including Bank Nifty, from daily and 75 minutes time frames. So let us look into them. The first one is SBI Life. This is a 75 minutes high liquidity demand zone. See here we have a rally, 3 base candles and a rally. So this is what identified by our software. And this one we fine tuned with 15 minutes time frame. So here you have a 15-minute zone. Rally, 2 base candles and a rally candle. To make it clear, let me put it like this. Not rally, sorry for my mistake, drop base rally. This is a drop base rally. And apart from that, we have also one more in the recent time. Here we have again another drop base rally. This is a recently created one. On 24th December, this drop base rally was created. Today we got trade from this area. Okay, these we have 2 order flows. One is the old one and another one is the new one. But we need to fine tune with 5 minutes time frame. Let us look into the old order flows. So here we have drop, 2 base candles, rally and follow through candles. So this is the area and this is a fresh order flow. It's not yet tested. Prices came near to that, but it is not tested. So at the time a new 5-minute zones are created here. We have a drop, 2 base candles and a rally. And this one is tested on during last week, 23rd December. This zone is tested. But below that we have a fresh one. But again what happened? On 24th December, here we have a 15-minute zone was created. Within the 15-minute zone, we have again a rally, 2 base candles. This failed ERC candle as a rally in the dynamic viewpoint of view. And follow through candles. And this is the area we got the trade today. The blue color line what I have drawn is the buffer, entry buffer. And today prices entered inside the entry buffer area. So definitely we got the trade. When at a 13:55 candle, 5 minutes candle, 1 o'clock 55 minutes candle, and when it reached that 15 minutes target at 3:15 candle. So within 1 hour 20 minutes the trade is completed. We have 1:3.5 RR is there from here to 15 minutes target. What is the 15 minutes target? Here we have a 15 minutes high liquidity zone. We have drop, we have 1, 2, 3, 4 base candles and again drop. Prices were picking the orders. It looks like this zone is violated, right? This is the morning 9:15, 1 minute candle. So look into this 1 minute. The whole price action happened in 1 minute. See, this is a 1 minute candle. Generally moving like this much might be a doubtful, because I am thinking maybe there could be some freak trade would have happened somewhere here after the market happens. That way it looks like prices went up to here and then again came down. That's why I don't have any issues about this candle. I'm 100% sure this could be because of some freak trade due to software glitch in the systems, especially when huge order flows happens. Sometimes the glitch in the software might raise a freak trade. Somebody might have kept an order here, maybe 1 share or 2 shares. Due to heavy order flow, sometimes system while selecting all these orders, all of a sudden it may execute that one trade. Because of that just one stock trade, prices went up to here and sharply came down. So that's why we ignore such kind of, when you see such kind of candles. So that's why by ignoring this candle, this zone is still an active. See how much price action is taking place within this area. Maybe this could be a high liquidity area. And also this 15-minute zone is the origin for all these reactions. Here. This 15-minute zone, prices came down here, again moved up, and after that we got our trade. And finally they reached the target. Maybe some of you might have exited a little before, once it reached 1:3 RR. But up to 15 minutes it reached. This is software's point of view. But when a practical point of view, maybe some of you might have exited here, somewhere here. Because we have LOTL zones here, rally based drop, but this is the origin. Definitely prices will reach, that is what happened. But some people may consider this rally based drop, you may exit here. That possibility is there. But okay, our software did its work today. So how much profit it has given? SBI Life has given 6,806 profit, and which is 7.3% ROI as per one futures margin cost. But remember, this price just before your 5 minutes proximal it moved. Definitely you have to keep some entry to make it execute. If anybody would not have kept entry buffer, probably your trade would not have been executed. Okay, next one is Ashok Leyland. It has given 2 trades. First trade with entry buffer, second trade prices entered into the zone. Let's discuss both. First of all, it is a 75 minutes high liquidity zone identified by our software. Drop base rally. This rally is again a failed ERC candle. But dynamic view point of view, this is a big rally candle. Our software identified. Software considers the dynamic views. And today it gave 2 successful trades. Okay, how I fine-tuned this? With 15 minutes time frame. Here you have a 15-minute zone, drop base rally. This is the 15-minute zone. Maybe this 15-minute zone is acting as a high liquidity zone. This is the first time, this is the second time, This is the third time today, again fourth time. Okay. This 15-minute zone again fine-tuned with 5 minutes time frame. See here, this is a leg-in, maybe you can also consider add some extra body also here, because there is a gap is there, that way also. You may consider either a rally or a drop, either way. So base rally, it doesn't make any difference. And this is our fine-tuned area within the 15-minute zone. This is the fine-tuned 5-minute zone. And today, prices came into this stop buffer area. Something. I don't know why I have drawn this blue color line. Okay. So prices came very close to, with small entry buffer, your trade would have been executed. Actually, the entry buffer I kept within this 15 minutes area proximal. The reason is this 15 minutes area is high liquidity zone. Prices are coming to the 15 and moving up. That way. So when your trade would have been executed, morning 9:35 candle, 9:35 5 minutes candle. And what is the target? Here you have a 15-minute zone. Go to the 15 minutes time frame. So here you have drop, 2 base candles, and again a drop, follow through candles. And here you got the entry, and then prices reached the target. 15 minutes target. And when it reached the target? At 10:15. When you got the trade? Sorry, let me go to the 5 minutes, you will get clarity. Morning 9:35 it reached entry, it gave an entry, and at 10:20, that means less than an hour, in around 15 minutes it reached the target. This is the first trade. Again it gave a second trade, this time prices entered into the zone. From the zone we will consider. Even if you keep entry buffer also, okay, because sometimes we keep entry buffers. Either way. But why I am considering prices are entered. Earlier with entry buffer, second one, even without entry buffer, the trade would have been executed. This is theoretical, but practically, generally, we keep entry buffers. At maximum 0.1%, sometimes less than 0.1, depending on the other price actions within the chart. You will try to manage our risk. Okay. But have you observed? This time this zone is, the 5-minute zone is violated. But the prices are within the stop buffer. Exactly at the stop buffer area, prices reached. See, every time I am providing you the stop buffers. In every day, in our premium videos, at the end of the video, I am providing you the stop buffer. How much you should use. Exactly it reached that stop buffer and then started moving up and finally reached the target at 14:45 candle, 5 minutes candle. And when it gave you the entry, at 14:15 candle it gave you the entry. And 14:45 minutes candle, that means within the half an hour your trade is completed. In 30 minutes. So both the trades are successful, but second one is your stop buffer saved your trade. That is what you have to understand. That's why you learned the stop buffers concept in our course. That's why every day I am generating stop buffers at the end of your premium video, in our daily videos. Okay, Ashok Leyland, both the trades, how much profit they have given. First trade is with entry buffer I considered. Second trade, because it is a clean trade, prices entered. Suppose if anybody did not use stop buffers, your second trade would have been, not stop buffers, entry buffers. Your second trade would have been executed. So that way I am considering. This is our zone's performance point of view I am calculating. But remember, in your practical trades, mostly you will use stop buffers or you reduce stop buffers depending on your risk management. Okay, first one with stop buffer, it has given 6.7% ROI. 6,975, close to 7,000. Second trade without stop buffer from the zone proximal entry, it has given 7,225 rupees profit, which is 6.959% ROI. See, the difference is very small. The first trade, if you would not have used entry buffer, you might have missed the first trade. Why we don't use stop buffer? Somebody feel if the risk is high, they may not be using that. See, everything, the whole game is based on the risk management. Theoretically, maximum acceptable risk is 2%, but practically you may not allow that. Practically only 1.5% is allowed for you. For your capital, for your risk point of view, you may not take the trades 2% risk. But theoretically, maximum acceptable is not beyond 2%. That is what you have to understand. Okay, so this is about Ashok Leyland. Next, we got Bank Nifty. 3 trades it gave today, Bank Nifty. This is a 75 minutes high liquidity supply zone. See, this is the hidden body, drop candle. This is a drop, leg in. You have 1, 2, 3, 4 base candles and then again a drop candle. So this is a high liquidity zone as per our software's point of view. Okay, this one we fine-tuned with 15 minutes time frame. In the 15 minutes, have drawn drop, 3 base candles and a drop candle. Again, we have a drop, base, drop. Previously, I have explained this. Bank Nifty, we analyzed this stock earlier. These are the two 15-minute zones. And again fine-tune them with a 5 minutes time frame. Here we have a rally based drop with small pro gap is also this stock is having. So earlier prices came close to the stock and moved. Definitely this is a good area, but unfortunately today it is violated. But we have to accept. And here again you have drop base drop. So this is what we considered. And today, see here I added the entry buffer to this. To this zone, I added the entry buffer. Whatever the blue color line you are seeing, that is the entry buffer. And go to the 1 minute candles, you will get better clarity. How you would have got trades today. The first trade happened in morning 9:19 candle. Within the entry buffer area, prices reached and it gave you the trade. And then sharply it moved down and reached the 15 minutes target. You got the trade at morning 9:19 candle. And when it reached the target, 9:30 candle. That means within 11 minutes the trade is completed, Bank Nifty. So where is the 15 minutes target? How we have drawn? So here. We have a failed ERC candle. We have base candles and then rally follow through candles. So this is the 15 minutes target. So today prices started from here, reached, and again it pushed back up to here. This is the 5 minutes target. This is the 5 minutes chart. We got 1:3.7 RR from this area till the entry buffer area till this 15 minutes target. Why I am going 1 minute is so that you get better clarity where exactly you got the trade. Which 1 minute candle, because mostly if it is 9:15 candle, our trades might be missing at 9:15. Some people won't take trades in 9:15. 1 minute candle, 9:15, 1 minute candle. But this is 9 o'clock, 9:15, 1 minute candle. From this 15 minute zone, the prices were started moving and entered into our fine-tuned 5 minute zone, buffer area, entry buffer area. It took the trade and came down. And once again prices reached, but it is a little below this entry buffer. And then again came. Here some LOTL zones are created from the 15 minutes. Probably this is a 5 minutes LOTL will be here. Having confluence with 15 minutes zone. And that is holding the prices here. Next we got a very clean trade. Prices entered into this 5 minute zone, but pushed the prices. It gave only 1:3.2 RR it has given. The second one. If you take the second one, with the type 2 proximal entry, your second trade would have been executed. But unfortunately, second trade failed to reach the target. But still, why we are considering this as a successful trade? Because it has given 1:3.2 RR. I mean 1:3 RR. 1:3 RR with type 1 proximal, 1:3 RR. With the type 2 proximal, 1:3.2 RR it has given. See, here we are evaluating the performance of these zones, the order flows. Minimum 1:3 is a successful trade for us. So that is what you have to understand. Maybe the profit could be very small, but it has did its job, at least minimum 1:3, because there are traders, some traders, they blindly take only 1:3. Once the price comes, they exit. That is, they are happy with that. They don't look for more targets. Of course, we high liquidity zones, we have higher chances. Many times prices will be reaching 15 minutes target. Majority of the times. Rarely it will miss. But unfortunately today it missed. Why? Maybe demand is very strong. See, look into the 1 minute time frame, you will get clarity why we miss the trade. But we can't predict such kind of things. It's not easy. But after price action only we can tell. See here, we have a rally, base rally. Let me draw. Many times these kind of 1 minute rally based rallies, they will be easily violated. Maybe institutions might have kept a very strong order flow today. Because that's why demand is so strong today. How sharply it moved up. So it took support from here. Again a drop base rally is created. Maybe institutions might have considered this as a high liquidity zone. After this price action happened only we are able to conclude. But before that what you will be doing? You will be waiting your prices to reach up to this 15 minutes target. But that didn't happen. Ultimately prices moved and this time prices are violated. Those who exited at 1:3 RR, they would have got profits. But others, this trade would have been stopped out. Those who are aiming for this 15 minutes target. The prices reached and again came here, moved up and again came here. Maybe second time or third time we might have realized this could be a high liquidity zone and we would have exited our trade. But Those who are aiming for 15 minutes target, definitely you will be thinking prices will come up to here after some time. But that didn't happen. Your trade would have been stopped out. But those who exited at 1:3 RR, it is a successful. But you will be missing when prices are reaching 15 minutes, use profits you will be missing. But today you are saved. Okay, high liquidity zones point of view, minimum 1:3 RR is a successful. The performance point of view. That is theoretical, but practical is different. Practical is depending on individuals' mindsets and psychology. Okay, it looks like a successful trade because it achieved 1:3 RR. But those who are aiming for 15 minutes, their trades would have been stopped out today. Okay, after that we have another fine tune. This is a clearly stopped out trade. This is having order flow, strong order flow. That's why see this is a holding. But what institutions has done? They created a leg out candle. They might have added a huge order flow here. Now demand exceeded the supply. And this 5-minute zone is violated. But anyway, this is the stopped out trade because it is a fresh zone. First time we are taking this trade. So we have to register this as a stopped out trade because it is a fine-tuned zone. First time price is entered. The type 2 proximal, first time it is entered. Go to the 5 minutes, you will understand. See, if you would have drawn type 1, it looks like it is a tested zone. But our high liquidity fine-tuned zones, even type 2 works well. So that's why type 2 is a fresh zone. Definitely we have to consider this is a violated. So that is the way Nifty has given 3 trades today. One is with entry buffer. Second one, even without using entry buffer also your trade executed but achieved 1:3 RR. Failed to reach 15 minutes target. And third one, a fresh zone violated completely today. Okay, Bank Nifty first trade has given 2,811. This is the trade reached 15 minutes target. This is the morning 9 o'clock 19 minutes, 1 minute at 9 o'clock 19 minutes trade. This one reached 15 minutes target, but ROI is very less, 2.7. Especially indices many times, the Nifty, Bank Nifty, Fin Nifty, or Nifty next 50, all these indices, the ROI is less. Mostly we get average ROI 6%, 4%, majority of those trades. But this is too less. But okay, profit is a profit. This is a good profit intraday traders point of view. But HLQ zones point of view, it's less than our 6% average ROI. And the second one even much less because until 1:3 RR it has given 1.6. If it would have reached 15 minutes, again another 2.7, or maybe this is without entry buffer, maybe 2.9% might have given. But anyway. But definitely this trade would have been, those who did not exited at 1:3 RR, their trades would have been stopped out for this. Okay, our performance point of view, it achieved 1:3 is a successful. And Bank Nifty, the third trade is a clean stopped out trade because it failed to achieve 1:3 RR. The zone is violated immediately. So 817 rupees loss as per one futures lot size. And your ROI could have been minus 0.8% negative ROI as per one futures margin cost. So this is about Bank Nifty trades. And there is one stopped out trade Lupin, and there is one more successful trade, but I did not registered. Why? I will explain. First, let us look into the Lupin. Why it is stopped out. Lupin is having two stopped out trades. One I did not register because that is a HLQ. Already once it is tested the zone. Today second time or third time this is violated. Previously it was tested. We consider this could be a high liquidity. Could be. We are not confirming it is a high liquidity. It could be. If anybody consider this could be high liquidity, took a trade, it would have been stopped out. Actually it achieved 1:2 RR, but not 1:3. Because I was monitoring this. One is to 3 did not achieve here, this one. Okay, what is this? This is already we discussed earlier. This 75 minutes fine-tuned zones we discussed. Previously, one of the HLQ analysis videos we discussed. So please refer those videos. But let me directly get into the fine-tuned 5-minute zone, 5 minutes time frame to save our time. Anyway, it is stopped out trades. See here you have a drop base, a drop. This is a fresh zone. This one is a fresh zone. Today it came. Prices entered in this zone today. This morning 9:15 candle. 15, this is 5 minutes, but actually 1 minute candle, not 9:15. Here in this candle, morning 9:19 candle, it just reached the zone and then prices came down, but it is not achieved 1:3 RR. But 9:15 candle also reached with small entry buffer, and that one achieved 1:3 RR. If you would have added a small entry buffer, see here, if you would have taken morning 9:15 candle, here, exactly here. See, this is not at all a practical, just I am trying to tell you. Because first of all, 9:15 trade is not practical. It might have just entered into the stop buffer, and here it reached. One is to 3, 1:2.95 means 1:3 RR. It looks like it is achieved. But remember, this is not at all practical. And this is the practical. The other one, which one? Morning 9:19. It gave again, it pushed it down, and how much it has given ROA after that? Maybe up to here it would have given. Prices came and came down up to 1:2.34 ROA it achieved. So it is not a successful trade. There is some order flow, but later on demand has been increased. Here institutions created rally, base rally, follow through candle. This entire high liquidity zone area is violated. Institutions might have added a huge order flow here. Obviously, a high liquidity zone has to be violated. Definitely institutions will add huge order flow. Just imagine. Let me delete this. Just imagine what would have happened. Because this is if you guess, this is a high liquidity area. Because so much of demand will be there here. If you feel like that, see, next time prices entered into this area, if you would have taken a trade in this zone, how much profit you would have got? Good profit you would have got. Sometimes if you are of course sometimes such kind of zones also will violate. But there are possibilities there. If the risk is very small, if you feel, okay, well, let me try. We can try sometimes like this. When high liquidity zones are violated, who is the actual responsible at 1 minute level? If you carefully observe, sometimes you may get good trade opportunities. Don't expect 80% success rate for this. But at least a decent success rate will be there. Maybe 60 or 65, such kind of percentage, such kind of zones. If this could have been stopped out, but here we took a trade and again see the huge move it has given. Good ROA it has given. Let us check how much RR it has given. With small entry buffer and stop buffer, some approximately I am measuring. See, up to here 1:3.6 it has given. Even if you go further, 1:, close to 1:5 also it has given, 1:4.85 till this up to here. But this is a practical scenario up to here, 1:3.5 RR. See, if high liquidity zone has to be violated, institutions should add even more strong order flow. Any reactions to such kind of zones immediately might give you. Market moved up, and then again came, we don't know. We don't be having any guarantee here. While coming back, the supply could be even much stronger, and this might be violated. But anyway, lupin is this is the one violated, and we have one more 5-minute zone, right? The one above, that is also violated. But this is already a tested zone. Rally base drop. See, prices went and again came down, again went and came down. Is it a consolidation or is it a high liquidity? If it is a consolidation, next time it will be violated. See, prices again came near to the, again came down. If you think price action point of view, it looks like this is a strong order flow is there. Maybe if it is a high liquidity zone, we can plan a trade. See, earlier also prices came close and came down. All this indicates probably this is the area could be acting as a high liquidity zone. But today, it's gone. It has given some profit actually, but not good enough to reach 1:3 RR. Go to 1 minute, you get clarity. So this is the candle. Prices entered and sharply moved down. But institutions here, they created a rally base, rally 1 minute, maybe a strong order flow they might have created. That's why again from here it pushed. This time this entire zone is violated. But many times such kind of rally-based rally will be violated many times. So you can't predict because the zone is not violated. After violation, you may think this could be a very strong order flow, but this is again already this rally-based rally is again tested already. And then it is violated. After violation, immediately prices are retraced to this rally-based rally. Maybe you would have considered this could be a strong order flow. Maybe if the risk is small, you can plan for a long trade. But that didn't happen. Tested, came down, and this rally-based rally holded. Maybe the order flow again consumed and then pushed. This time it is violated. But this is a high liquidity area and already it is a tested zone. For our statistics point of view, we don't consider this zone violation. Because already earlier this zone is tested and gave some profits earlier. If it is a first time prices entered, we should consider this is a zone violation. Second time, third time, they are all just bonus to us. If it is violated, okay, we will just ignore that losses because that is a minimal compared to the earlier profits we would have got from that zone. That's why if it is a high liquidity, what is our strategy? As long as the zone gives the profits, we will take. One day it will be violated. That loss we just ignore that. Performance point of view, high liquidity zones performance point of view, that is daily and 75 minutes, high liquidity zone strategy, performance point of view, those things we don't consider. Because we never know when a high liquidity zone will be violated. It may give 5 or 6 tests, then it may violate. It may give 1 or 2 tests and then it may violate. That possibility is also there. Or a fresh zone might be violated. That chance is also there. Then we will consider that is a loss. Because high liquidity zone must work at least minimum once. But second time we take trade. If it fails, okay, we don't consider that as a loss because already first time it gave profit to us. Because we never know how many times it works, each time prices enter into the high liquidity zones, that is, I am talking about 5 minutes high liquidity zones. Those zones we plan. Maybe it could be a fine-tuned 5 minutes high liquidity zone, or it could be an aggressive 5 minutes high liquidity zone. The rules are same. We keep on taking the trades until the zone is violated. First time it is violated, it is a clear loss for us. That's a failure. Loss means it's a failure. Performance evaluation point of view, we are considering the failures of the zones. All these red colors are failures of the zones. Okay, this is about lupin. So what is the other stock that we got profit but we didn't consider? That is Tata Chemicals. This is also a 75 minutes high liquidity demand zone. This is a drop base rally. This drop base rally is having a 15-minute zone as an horizon. See here. This 15-minute zone as an horizon. This could be, I am considering big candle. This big candle is a leg-in. You have a base, you have a rally. See, the length of this candle is almost same as the length of this candle. Bigger candle. But body is less. Maybe it could be a failed ERC candle, or maybe the body is a little bigger than what we expect for failed ERC candle. But anyway, this is the leg-in, no issues, and base rally. This 15-minute zone is the horizon for this entire 75-minute zone. But the only problem here is the fine-tuned 5-minute zone is not the horizon. That order flow is little below. Maybe institutions might have spread the order flow up to this area. But while planning our trade, we will be planning at the 5-minute zone only. Because if you are planning at the 15 minutes entry level, risk will be very high. Intraday point of view. If you are holding for short term or swing trades, you can take entry at 15 minutes itself. But intraday always we have to take in the fine-tuned 5 minutes levels only. So that's why we have to wait prices. Otherwise, sometimes prices again touch this a little below and it will move up. But no other choice for us because risk is high. But today what happened? Prices entered into this area. And here we have a 15 minutes target. This drop base drop. But failed to reach 15 minutes target. Okay, now you may ask a question, has it been reached at least 1:3 RR? No, 1:3 RR also it did not reach. How much it achieved today? 1:2.38 it achieved. It didn't achieve. That is the reason why I am not considering this trade. Either success or failure. But definitely you would have got profits. The reason is the zone is not violated and also prices are closed above the zone. Definitely you would have got some decent profit. Those who have taken a trade. And why it didn't achieve 15 minutes target? Maybe this is almost at the last 1.5 hour of the market. The trade, go to the 5 minutes. When we got the trade in 2 o'clock 25 minutes candle, almost last 1 hour trade. Many times last 1 hour trade, what we do, we exit at 5 minutes, 5 minutes target level. Here you see here, you have a drop base, a drop is there. Probably you would have exited, some of you might have exited here, drop base, a drop. in this candle at 14.25, in this candle you would have exited. But still, why I'm not considering? Even if you consider drop base drop, till here if you want to plan your trade, you can't take this trade. Why you can't take this trade? You won't get 1:3 RR. Maybe while fine tuning you may get the 1:3 RR. If anybody is planning the trade, let us check. If you want to take a trade, your RR should be up to here. Okay, what is the RR you got? 1:5.6 RR you are getting. Either you reject, or other option, you adjust your entry, fine tune the entry. Previously several times I explained this technique. In this tool, you reduce this entry until you get 1:3 RR. See, now you got 1:3 RR. Is price entered into this zone? Yes, a little below. That means your trade would have been executed. And you would have exited in this drop base drop. This drop base drop, this 5 minutes target, you would have exited. That way you would have got the profit. Those who planned last 1 hour trades, generally people use such kind of techniques. That way how much profit you would have got? Your entry is at, your target is at 1035.45. Minus your entry 1028.60. You would have got 6 rupees 85 paisa profit. How much profit it would have given as per one futures point of view? Margin calculator, zero the margin calculator. Tata Chemicals, January expiry, lot size is 550, and margin cost at the time of closing the candle it is 1,23,000. Approximate value we will calculate. 6.85 into 550 rupees, you would have got 3,767 rupees profit. Within how much time? At 2 o'clock, 25 minutes candle, you would have taken the entry. On 2 o'clock, 45 minutes candle, you would have exited. That means within 20 minutes, your trade is completed. Within 20 minutes, you would have gained 3,767 rupees. What could be your investment? 1,23,143, maybe a little below. It could be 1,22,900 or 800 will be there approximately. Into 100 divided by, even let me add extra margin, a little extra. 1,23,000. Instead of 1,22,700 or 800, I am adding 1,23,000. Still we are getting 3% ROA. Definitely you would have got 3.1% ROA or 3.2% ROA if you would have reduced the margin value. But anyway, at least you got 1:3 RR in just 20 minutes. You got 3% ROA in 20 minutes. Those who planned for a pure intraday trade, this one, not high liquidity level. High liquidity level, 15 minutes target. Intraday level point of view, 5 minutes target. Why we are looking 5 minutes target is because we have only 1 hour closing session. Last 1 hour closing session, reaching 15 minutes targets, not easy. It will reach sometimes. Sometimes it will reach. But today it didn't happen for this stock. That way anyway I did not consider for this stock, performance evaluation point of view, but otherwise this also could have been a good profit. 1:3 RR and you got 3% ROI. But fine tuning has to be done. See, this kind of work you have to do when you want to become a good trader. All these points you should consider. They keep on telling you in your mind. adjust the entry, you may get 1:3 RR. See, we adjusted the entry. How many times I explained this technique? During last 1 year, at least 10 to 15 times, more than 10 to 15 times I would have explained this technique, adjusting the entry when RR is not there. Sometimes you miss the trade. See, if suppose if RR is a little less, you would have moved a little more before, you might have missed this trade today. It's a lucky trade, but a lucky trade or whatever it is, trade is a trade. According to your analysis, the trade executed. You made an impossible trade, made it possible. That is what the real talent, that kind of techniques you are learning, but you have to implement them. Initially it looks like it is impossible trades, but practically it is possible. It is all how your mind is talking to you. Your mindset makes the important, plays the most important role here. See, all these small profits will become big profits. 3,000, 5,000, all these things every day if you are getting, and at the end of the month, it will be more than what the capital you are investing. It looks like all of a sudden, within a month, you doubled your money. If not doubled, 50% or 60%. Your capital has been increased. Some of our high liquidity zone traders, previously, they took such kind of trades. Those who've been following me for the last 10 months or 1 year, they have taken these trades. Some 6 months back itself, they took such kind of trades. They put those details in the comment section. If you refer the 6 months old HLQ analysis video, some of the members commented how they took the trades. When they are able to take, because they are learning the supply demand zone only for the last 1 year. You can also do the same thing. If you recently completed a course and following these HLQ analysis videos, you should not think they are impossible. They are possible. When your senior members, when they took the trades, why can't you take? You can also take. But only thing is, your mind should accept to adapt such kind of methodologies or techniques. And sharply you should react when price action is nearing to such kind of zones. Because we know a lower time frame zone as an horizon to higher time frame zone is a powerful concept. But the risk is high. Immediately you need to react by adjusting your entry. See, rather than taking here, we took the trade here. Because it is giving you a minimum 1:3 RR. Till the 5 minutes supply zone. Because the last 1 hour trades mostly we use 5 minutes, but HLQ zone's point of view, I will check whether they are reaching 15 minutes target or not. The practicality is different. My software statistics are different. You should not compare both. How well the software concepts are working, for that these HLQ analysis videos will tell you. But the real profits you are getting, they are practical. You may exit before what our software is actually considering. If you are thinking like a machine, how machine is doing, probably you will get. But human emotions plays the role. That's why many times what we do, what machine is really telling you, you won't follow them. Machine doesn't use any emotions when it is providing the results. But you add a lot of emotions. Those who control the emotions, they will become good traders. They grab more profits in the coming days. But initially, getting some profits is very important for you. Stick to 1:3 RR initially, but don't think, okay, I would have hold this trade, I would have got double the profit. You might be thinking like that many times. Because by reaching 15 minutes target, it will give you some 7,000 rupees profit. By exiting at 1:3 RR, you get only 3,000 or 3,500 rupees profit. It looks like double the profit you missed initially. Don't bother about them. Initially, gaining your confidence is important. Once you gain the confidence, then how you can control your mindset. Because already you earn some money, Now it is easy to control your mindset because you won't get any losses. If at all you lose any money, for already gained profit, some money you may lose. But your original capital still will be with you and you will be a happy person. So at the time, definitely we control our mindset in much better way. That way slowly you grab more profits. Even though you don't hold till 15 minutes target, maybe some more profits after achieving 1:3 RR you will aim, or you will use after achieving 1:3 RR by using 1 minute trailing stop or 5 minutes trailing stop loss. You will try to hold. You will try to grab more profits. That kind of strategies you will build. So it's all experience, and then how we are controlling our mind. These are all two important things a trader should have. Okay, these are all the trades, and the few stocks we didn't get the trades. One is Cholamandalam Finance. This one already we fine-tuned. This is a daily zone. I am not explaining because earlier videos I explained all the order flows. See, today's candle, daily candle, prices did not enter into this area. And next one is M&M. M&M also we discussed earlier. We have a fine-tuned 5-minute zone, a tested zone. This one is tested. So that's why we didn't have any other plans to. In the recent price action, did I miss anything? Rally base, I didn't consider medium size candle. That's why I didn't consider this. This rally base drop is there. Why I didn't draw is this is LOTL. Actually, a lot of order flows are here. But anyway, I didn't consider, didn't show much interest on this stock. Unless a new clear 15-minute zones are happened before this order flow. At this point of, we don't know whether this is a high liquidity zone or a normal zone. Next, OAL is there. This is also a daily zone. OAL is also explained earlier. How I fine-tuned this zone, I already explained. I think probably on last Friday we might have discussed OAL. And today the prices did not enter into this order flow and we did not get the trade. So these are the high liquidity zones we identified in the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.